Another possible challenge to the economy: fears about a slowdown in the housing recovery. During the worst of the foreclosure crisis, investors, many of them big money hedge funds, swooped in to buy up thousands of properties, which pushed prices higher than anyone expected. That helped jumpstart the housing turnaround. But now there are signs that those same investors may be pulling back. Diana Olick explains what that may mean for the housing market.
To a rehab division.
When we visited Atlanta-based The American Home earlier this year, CEO Aaron Edelheit was buying and rehabbing foreclosures at a fast clip.
We own 2,500 homes in Atlanta, Charlotte, Nashville, Orlando, and Tampa.
Today, he says he's still buying, but he admits some investors are pulling back, undergoing a digestion period after exponential growth.
That means maybe a slowdown in how many homes they acquire. That may mean letting go some employees in areas that it doesn't make sense, or maybe you grew too fast. But it's really institutions starting to prove or work towards profitability to show Wall Street.
Investors made up just 16% of home buyers in July, according to the realtors. That's down from 22% in February and 25% in early 2009. In some of the hardest hit markets, investors made up more than half of the buyers during the worst of the foreclosure crisis. Now they're finding less to buy, and what there is more expensive.
We definitely see the investor market cooling. So on one hand, you had Wall Street early in the season buying as many homes as they possibly could, and then at some point becoming frustrated because you just couldn't buy in bulk the kinds of inventory they'd been able to get in 2012 and 2011. And so those investors started to pull back.
Last spring, Redfin was running seminars for small investors, and Kelman says the classes were packed. It's all anyone was talking about at cocktail parties. As home prices were rising again, people were pulling money out of their 401ks to buy properties. Now, not so much.
The volatility that was once the private domain of Wall Street has come to Main Street, and that has created all sorts of risk both for investors and for lenders, as well as regular American home buyers.
It was inevitable, as housing is now yet another tradable asset class, much like mortgages were a decade ago. For Nightly Business Report, I'm Diana Olick in Washington.